All right. It's J-Rod and welcome to Stocks That Rock. Today, I'm going to do something different. Instead of highlighting a breakout stock like I normally would, I'm going to share the 3 lessons that I learned from the biggest trading loss of my career. And I hope that you can avoid learning these lessons the hard way yourself. Now, I'm going to get into the lessons in just a moment, but first, I have to tell you about this awful trade. 2 years ago, I got a trade idea from a buddy of mine. To me, the idea was so juicy, I broke many of my own trading rules to get into the action. Spoiler, that's always a big mistake. It was a short trade where I bet against a stock, which as an optimist, I almost never put on. And while I agreed with my buddy that the stock was wildly overvalued and ripe for a fall, this just really wasn't my kind of trade. To boot, I was already up big on the year, so there wasn't a need for me to swing for the fences. But the potential upside was huge, so I got greedy and I went in head first. Within a month or so of being in the trade, it tanked and I lost all of my investment. So instead of ending the year up big on the backs of good, well thought out trades, I wiped out all of my gains in one trade and closed 2019 in the red. Now I call this trade the BFL for big freaking loser. But after I broke down what I did wrong with the BFL and did some serious soul searching, 2020 turned out to be my best year ever as a trader, even at peak pandemic. And 2021 is shaping up even better than last year. Here are the 3 simple yet powerful lessons that I learned that led to my success. Lesson number 1, plan your trade and trade your plan. If you want to be a successful trader and be in the markets for a long time, you need to plan your trades. Now, I've been trading for a long time, and I know what kind of stocks I like, what kind of chart patterns and trade setups I like. And above all, I know how much money I want to make on a trade and how much I'm willing to lose. So here's my typical trade plan. I put X number of dollars into a trade. Once I double my money, I take half my profits off the table and I let the rest of the trade ride. So at that point, I'm playing with house money because I've already made my investment back. And on the downside, I close out a trade if it loses 50% of its value. Pretty simple trade plan, right? Did I put this plan in place on my big fat loser of a trade? No. I had a profit target, but it was way higher than it should have been, and I didn't use a sell stop. If I had planned out my trade appropriately and stuck to my plan, I would have slept better at night and saved myself thousands of dollars. Don't make that mistake. Lesson number 2. In trading, position size matters. You've got to size up your trades so that no one trade can break you. And your best trades can actually move the needle for you. One big reason I went wrong with the BFL is that I put too much money into the trade. So after learning this the hard way, here's my new and improved strategy of sizing. I keep a small portfolio, usually 7 to 10 positions, so that I can focus on and keep track of each position closely. And I size my trades so that the majority of my risk capital goes into my highest conviction bets. These are the trades that I do the most amount of research and due diligence on. So each one of these trades might be worth 10 or 20% of my overall trading account, depending on how confident I am that the trade will be profitable. Conversely, I put the fewest dollars into my lowest conviction trades. We're talking 3 to 5% of my total capital. That way, most of my money is working on trades that I actually believe in. But I've still got space in my portfolio to trade speculative opportunities without putting too much risk on. And of course, if a low conviction bet starts to pay off, I can always add to the position. With my BFL trade, I took an unusually large position in a low conviction bet. And in hindsight, if I really had to put that trade on, I should have put on a smaller position, which would have minimized my risk. Last but not least, here's lesson number 3. Don't dwell on your mistakes. This is the most important lesson. When you mess up, figure out what you did wrong, take a good mental note, and move the hell on. Otherwise, you risk knocking yourself off the horse and not getting back on again. With my BFL, yes, I made mistakes and I ended up losing money, but I let the loss consume me for months. Dwelling on the trade shook my confidence and it made me question myself as a steely-eyed trader altogether. But in reality, my trading strategy works just fine. And most of my trades had been winners up to that loss, and they've been winners since then. Above all, if I knew I'd never bet the farm again on a speculative bet like that, there was no reason to keep beating myself up over the BFL. Once I realized that, I was back to rocking and rolling in the markets again. Okay, so to recap, lesson number 1, plan your trade and trade your plan. Number 2, position size matters. And number 3, don't dwell on your mistakes. And here's the bottom line. As long as you learn from your trading mistakes, you'll always emerge from losses stronger. And by watching my videos and reading my articles, I hope you won't have to learn as many trading lessons the hard way like I did. Thanks for watching today. If this video helps you out, please hit the like button and leave me a comment. I'd love to hear from you. And of course, make sure you subscribe to the Rich Retirement Letter YouTube channel so you never miss one of these videos. Thanks again, and for Rich Retirement TV, I'm J-Rod, and I'll see you next time.